Hey guys, what's going on? Welcome to the video. So we had another volatile week in the stock market, with the dip getting bought up and a strong upside reversal into new all-time highs once again. In this video, we're going to be going over the current setups on the S&P 500 and with Bitcoin, key levels to watch and what to expect next, and then two individual stocks with potential upside reversal setups. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P 500 with the SPY chart. In last week's video, we went over the key upside pivots, which were at 661 to 661.78 and 664 to 664.89 as the key levels that would act as strong upside triggers if they were reclaimed above. And that is what played out, starting with a gap up that tested 664 to 664.89 as resistance, which held on the first attempt, but on the pullback it was able to hold 661 to 661.78 as new support. From there it got the break higher, triggered on that break above 664.89, which then opened upside back to the previous all-time high at 667.34, and then new all-time highs on the break above. And for the rest of the week, it established new support at 666.5 to 667.34, that previous high, and then made new highs the rest of the week, hitting 672.68 before pulling back on Friday. So into next week, 666.5 to 667.34 continues to be key support, and that keeps the all-time high breakout intact. Holding above it can target a move back to Friday's high before new all-time highs above there. Breaking back below 666.5 can start a pullback back towards 664 to 664.89, and if that fails, it could then target 661 to 661.78, then 659.11 to 659.5. Overall, though, there continues to be no reason to fight the trend, and we should continue to have an upside lean until proven otherwise. So now taking a look at Bitcoin, in last week's video, we talked about how 113,400 to 114,000 was the key pivot to watch, and if it was able to reclaim and hold back above it, that would act as a strong upside trigger. What played out was the bull case, with the break above 113,400 to 114,000 acting as that breakout trigger, and got a very strong rally higher from there, hitting the targets at 117,000 to 117,500, 120,000, and then what I would watch as the next key resistance above, which is at 124,000 to 124,550. So what to watch for into next week is a break and hold above 124,000 to 124,550 triggers the breakout into new all-time highs. The trend has gotten pretty extended though now, so I'd watch for some type of consolidation or base to build out before attempting that potential break. Key supports below are now at 120,000 and 117,000 to 117,500, and it should be considered healthy and bullish as long as above 117,000, as that was roughly the previous swing high, though a great look would be something like building out a consolidation between 120,000 and 124,000 to 124,550 before that potential break into new all-time highs. It's important to note though, the setup is still range bound overall, and for a pullback to come back and play, a break back below 117,000 can target a move back to that 113,400 to 114,000 key zone. Overall though, we should have a strong bullish lane moving forward on this as well, though it probably does need to cool off the larger move by building out another base or consolidation range. Alright, so now getting into some individual stock setups for the week ahead, and after scanning through hundreds of charts, there are not many new strong conviction setups. As you guys know, the strong conviction setups are the setups that have well-defined consolidations or well-defined patterns with a well-defined breakout trigger above. And this week there are not any of those that I have not already gone over, but we will be taking a look at some intriguing dip buys that can potentially set up for upside reversals. Alright, so getting into it and starting out with a potential upside reversal setup in Cava, ticker symbol CAVA. So this stock had a pretty major fall as it was down close to 70% from its all-time high. This past week though, it tested a major pivot at $58 per share with a good reaction from buyers so far. So 58 was a swing high from its IPO and the breakout trigger from early 2024. So it has found support right where it needed to so far. From here, if it's able to continue to hold, it can see larger follow through to the upside. And the next target above is 67.5 to 68, which is a shorter term resistance zone. And if it's able to break above 68, it can target the other long-term key pivot zone at 71.8 to 74.35, which would be a major decision point as it acted as the bottom of the range for more than a year, and it triggered the post-earnings breakdown from August. Testing that would likely result in an initial pullback at the least, but if it was able to break above, it can target that gap fill next. Another dip buy setup to keep an eye on is Mercado Libre, ticker symbol MELI. So this past week, the stock broke to the downside of its more than 4-month long consolidation range, which was triggered below 2280. From there, it broke and closed below the 200-day moving average at 22.15 and the 2200 key level. So for the time being, this is a pretty ugly chart in the middle of a large range breakdown. Mercado Libre is a historically very strong stock though, where dips do get bought up pretty quickly, so it's one that we should keep on close watch during this drop. It's nearing the next key supports below, which are at 2126, and that was roughly the top of the range from last August through this April, and triggered the breakout once it broke and held above. And then below there is 2000 to 2020, which was the previous all-time high zone from 2021. So overall, we can look at 2000 to 2126 to act as an overall key zone, as if the dip is going to get bought up strong in reverse, this would be the area for it to do so. For the time being, the chart is a falling knife and should just be kept on the watch list until there's signs of a reversal. But into next week, watch for a reaction off 2000 to 2126 if that does get tested, and if so, it can be playable with a tight stop loss to keep risk low. And in order to put larger upside back in play, it would need to reclaim back above 2200 and the 200-day moving average, which breaking above there can target 2280, which is that bottom of the previous range and the breakdown trigger, and because of that, above it would act as a larger upside trigger, likely to target 2500 and then those previous highs next above there. So that's everything I'm watching for in the week ahead. The stock market continues to stay very strong, but there aren't many new high conviction setups to take advantage of in the week ahead. But thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to my personal trade alerts, nightly watch lists, and answer any question you guys have in there. Good luck trading the week ahead, and I will catch you all next time, and peace out.